All right, folks, welcome to ProFuturesTrader.com for our kind of weekly end out closeout with Steve and I, where we give kind of a quick kind of market overview of some things that we're watching and just to kind of give you some ideas. Again, these are not or anything specific, no trade recommendations other than things that we're just looking at. If you do want specific trade recommendation, you can definitely just reach out to Steve or I. As we all know, every individual trader has different stop parameters and risk parameters, and everybody's a little bit different. So this is just strictly an overview of the markets, of things that we're watching. And we had a very interesting week this week, I will say. Had some volatility. Would you agree with that, Steve? We had some volatility this week.
Oh my, it's been crazy, hasn't it?
It has. It's
well. Let me tell you what I'm seeing. I'm seeing kind of a rotation into three different areas. The first I want to talk about is the stock market, and I'll just mention it. I'm a cycle trader. I keep track of cycles on different time frames, and one thing that you notice from looking at this chart is that it is making a lower low now. The S&P 500. We're in week 22 right now of an intermediate cycle. And that's pretty late to be thinking about putting on a fresh trade, especially a leverage trade. We'll probably get a bottom here in a few weeks, but we're in the timing band now for an intermediate cycle low. The purple line on this chart is the 50-day moving average, but that's also the 10-week moving average. And we typically don't see an intermediate cycle low until the 50-day moving average turns lower. It hadn't done that yet. So I would probably suggest to my traders that they avoid the stock market for right now.
I have to agree. I think it got, don't want to say overheated, but, things don't always just go straight up, and there's a lot of stops, in my opinion, below that need to be triggered in some way or another. But saying that, I'm surprised to be seeing these numbers that we're at coming into the end of Biden's presidency. I would say the last few months have been caught me off guard to see it go higher and higher. But with the bonds situation and interest rates, it would be nice to see this thing cool off and come back in some type of corrective activity in this market. And the S&P 500 you have here.
Okay. The next slide, I think, is the crude oil. Last month, you made a very good call on crude, and it has broken. I wouldn't completely say that it's broken out, but it's definitely gone up to the top of the trading range, and it looks like it could be on the verge of breaking out after months of just chopping sideways. So, yeah. One thing that I would like to caution traders that are looking at this, because it looks pretty tempting. We are on week 17. That's probably 2/3 of the way through a intermediate cycle. You start thinking about with oil that you get up around 24, 25 weeks for an intermediate cycle low. And so when's that top going to come? I don't know, but any asset that breaks out late in a cycle, and you can see this horizontal pink colored line that I have sketched on my chart, that may not be exact, but if it breaks out above that, which it very well could, I wouldn't expect it to go that far before we start dropping into an intermediate cycle low there as well. So I would just exercise caution not to get overly bullish, but it certainly looks a lot better now than it has the last half of last year.
Yeah, I remember talking about that on our past episode, just talking about the lows going slightly higher and higher and kind of telegraphing that. And you can see exactly kind of what it did. But I have to agree with you. Now that it's kind of taken off, what do you do now? And me personally, I probably kind of sit on my hands a little bit. I don't, with this type of volatility and the leverage ratios, it could be a little dicey. So, sometimes I say no trade is the trade, and this might be an example here as well.
Yeah, if you're already in, just be thinking about how you're going to manage the risk stepping out of that. So,
yep. So let's take a look at gold here. I'm a big gold bug, and I'll talk about gold as well. But what do you looking at right now in the yellow metal?
Okay, we're on week number 8. Week number 8. So we're in the first third of the intermediate cycle, assuming that the cycle is bullish. And I think gold is pretty clear. It's in a bull market right now. So I would anticipate that we're going to get another 8 weeks or so, or excuse me, another probably 12, 14 weeks of upside on gold. So I really like gold. I really like silver. If you're not in already, it's going to be difficult to find a place to jump in and where it makes sense to set a stop. If you had done that a day or two ago, you might have got stopped out on gold or silver today because there was a lot of volatility. And so if you step in, get a position, probably take a smaller amount of positions so that you can handle the volatility.
Yeah.
So that'd be my advice there. We mentioned in our last video, I think, about platinum, which is the next slide, and I talked about how you get these huge spikes, these huge moves, and we're starting to get one now on platinum. And you can see the way I drew this chart, there's a horizontal support area, which is down around 900. And then I drew some targets up above that. You can see back, I think it was in April, when we had a big spike move, kind of like we're getting now. And it started from the same price level.
Yep.
And so we could get a move that's similar to that. So I put that on there as a target. But my first target, what's that say, Drew?
1,064.6.
Okay, sorry about that.
No worries.
I can't see. 1,064 would be my first target, but it could head on up to 1,100 just as well.
Yep. Yeah, I liked platinum. I've been talking about it. I did a few, or just did an interview. I was talking about it. It's kind of been the quiet one, and like you said, down at that 940, 950, 960, I was liking it, and here we go up to 993. I think we approached 1,000 today. I've been liking this one, but again, like you said, this market has some pretty big spikes. So either you're preemptively in it, or you got to kind of, again, sit aside and not take the risk of jumping in and chasing the markets like a lot of people sometimes do.
If we get some consolidation next week, I would consider taking another small position.
Yep.
And if we can kind of get like a bull flag happening, let it consolidate, let that 10-day moving average catch up. May have noticed a lot of volatility in the grain markets today, mainly to the upside. Today was the January WASDE report, World Agricultural Supply Demand Estimates. And these are big reports that have the possibility of really pushing the markets one way or the other. And boy, did it push corn and soybeans today. So if you're a trader or if you're a farmer, today would have been an opportunity to make a lot of money, because soybeans moved 30 cents, corn moved 16. And this was because the estimates for corn were reduced from last year's harvest that is finished. They've reduced the size of that crop by 4 bushels an acre. That was a huge drop in the corn yield. The soybeans, 1 bushel per acre number was taken off that number as well. And the grain farming right now across the country is in a depression or a very deep recession. And farmers are looking at pricing grain below the cost of production, especially on soybeans. And the outlook on soybeans looked especially bleak. So, so we got an opportunity, maybe if you're a farmer and you still got unsold bushels in your bin, here's your chance to to be able to get a price maybe that's going to be up above your break-even costs. And we may start recommending to price some bushels for next year's crop. So pay close attention. We'll be probably making a recommendation soon to price some bushels for the 2025 crop year. Also, one other thing I did want to mention, especially in corn, the rally that we saw was in the old crop. The new crop is too far away, so we didn't see the spike in the grain price in November beans or December corn. But in the March corn and soybeans, that's where we saw really most of the price appreciation. There's a few other reasons, though, to be bullish on soybeans. Drew, if you want to go to the next slide. And that's the seasonals. And seasonally speaking, January, February are two of the strongest months of the year. It hadn't been that good for soybeans the last couple of years, and that's because of the dominance that South America and Brazil in particular is taking in the soybean market worldwide. The United States used to dominate that, so the trade used to be focused on the United States, and traders are starting to look more at South America now to lead. And so the trend is not as pronounced as it once was, but still the chart that you see in front of you shows a 5-year, 10-year, 5-year, 15-year, and a 30-year timeline. And soybeans typically rally between mid-January and March 4th. And so that could be an opportunity to price some beans sometime here in the next month or two if you've still got some old beans left in the bin, or if you're looking to price some of next year's crop. And what this chart shows is the commitment of traders. The large speculators have been shorting soybeans. This year we've had a record amount of short contracts held by large speculators. And you can see that the price of, or that the number of contracts held by the large speculators, it's not as deep as it was back in the summer. I expect that next week we'll see this commitment of traders report is going to show that the large speculators that have shorted the beans are now exiting those positions. And to exit those positions, they've got to buy. They've got to go long. They've got to buy those contracts back. So that's going to create probably a pretty decent rally in soybeans. And my target on soybeans now, if you're a producer, would be somewhere probably in the $10.80 to $11 range.
Nice. Okay.
One other thing that corn and soybeans have to look forward to, though, if you can go to the next slide, Drew, is the dollar and the real. You can see that since September, corn, the dollar is up almost 10%. The real is up almost is down almost 13%. That's a very wide spread. And so with the change of administration that we have, we might see this spread come back together, and that'll make the cost of our corn and soybeans worldwide more competitive.
Gotcha.
So it could stimulate some demand.
Yep.
And I just threw this in there. This is the corn chart. Don't have a lot to look at here, but we're near a potential resistance area. It's had some significance over the past year. If it breaks out above that area, we could see a pretty nice move in corn. Fundamentally, I'm not real excited about corn or beans, either one, but corn's probably got more potential as a crop this upcoming year than soybeans does.
And why is that? More specifically, why is that, or why do you feel that way?
Because South America is dominant with soybeans, and
Gotcha.
when 3 or 4 years ago, Trump was when Trump was president, he put on these tariffs, and the Chinese rebelled against the tariffs. And Trump renegotiated a trade deal where China had to buy so many bushels of American beans to avoid the tariffs. So it'll be interesting to see with the new administration coming in if that'll change. But under Biden, the Chinese were free to go to the cheapest producer, and that happened to be South America.
Gotcha. So that's part of the equation why our corn and soybean prices were depressed so much during the Biden era, is what you're saying.
That's right.
Gotcha. So, all right. Well, sounds good. Do you have anything else to mention for this week that you noticed or that caught your eye?
Those are the main things.
Okay. All right.
I'm anxious to see what you've got.
All right. So let's go ahead and let's talk about, I'm going to go and start with platinum. I know Steve talked about it, and I'm a big, my little 15 and 40 exponential moving average. This is a daily chart we're looking at right now, but we're getting a new fresh, what they call an angel cross. Wouldn't get into it right here, but I'd like to see this market back and fill. Like Steve was talking about, you can see some trajectory of some pretty big spikes. So on this one, I know Steve and I were playing with this one. I'm not going to tell you what our trades were, but we were playing with it. But I'm now kind of looking for just a small type of correction to maybe take another look at it and get back in to platinum, as you see here. Silver, this one's interesting. We had a big day in silver. We had almost $1 move today, Steve, in silver. In this movement. The jobs report came out, bonds tanked. I mean, we had some volatility, and this right here was just really had to hold on. And I know Steve and I've been playing it more on the long term game. But I am seeing, I do like to see, and I think this is a bullish indicator as these lines compressing and coming together. Another thing, it just looks relatively since January 2nd, it just looks relatively just strong to me. Just the way it's kind of ripping right up here. So it does look relatively strong. And this is where you can see some unforeseen volatility or short squeeze happen. And so as these moving averages tighten up right here, and we tighten up, may take a few more days, but you could see possibly some spike action continue in this market that really no technician is going to be able to put out there. It's just going to be kind of erratic. And that's kind of my gut instinct. I could be dead wrong, but kind of my gut instinct right now. We've got gold. Let's take a look here. We do have a confirmation of kind of an angel cross here. Again, like to see a little bit back and fill action, but the question is, will we get it? Sometimes these markets really get away from us and, pushes everybody up here when you start thinking, well, now I missed that. I got to buy a 27.58. So don't get baited. Be patient. I always make a saying, missed money is not lost money. If you miss it, just don't get that euphoric. I would like to see a little bit back and fill action to probably initiate a trade on this one, maybe around the 2670, 2680 area, but we'll have to wait to see if we get that. Lot of volatility in the markets right now. The big story I've been watching closely, I've got some clients that trade this some pretty big positions, but just free fall. Now, what's interesting is the narrative from Trump. He wants lower interest rates, and you're just not going to get it. In the street, in my opinion, is telling him that they're expecting a spike in inflation. The street right now is telling him, go take a hike. You're not going to get those lower interest rates because inflation is going to be the bigger problem. That's my gut instinct of what the bonds are kind of telling us right now, and that would be still kind of bullish for silver and gold and really all commodities as a whole. Dow Jones right now, it is sitting on a support, a small entry. I'm not saying buy at this level, a lot of volatility, but it is. I was watching this earlier. You do have a small buying indicator, but that would definitely manage that risk if you did. Because right now the E-mini S&P is saying otherwise. It is turned over to the downside on the E-mini S&P. You can see right here. So I would expect probably a relief bounce, maybe on Monday or Tuesday. And then on this one, on the mini S&P, you could be looking at some shorting opportunities if it gets back up to the 59, was that 50? My eyes are so 59.78 area possibly. But this was an interesting one right here. You know, are we gonna? What's the narrative going to take place on the Dow Jones and with Trump? And you know, it's going to be interesting how things unfold. We've got the inauguration coming up on January 20th. So you know, I know, you know, they say all technicals work to a point to where they break. You know, is this the part where on the technicals it kind of breaks and we go further to the downside? And you know, a little bit of my conspiracy hat, you know, maybe they bring it down and do a reset for Trump in the first few months, and we go through this crazy volatility, and then we got to work on trying to get it out. I mean, I know Elon said we're in for a rough couple years while they do the doji and while they kind of rework everything and to see how the markets are going to digest all those changes. I will admit, markets don't like change. And we're looking at significant changes with this latest Trump administration. I think significantly more than what you saw in the first round, because he knows what he's doing this time. He knows the players. He knows the game. He even self-admitted that he spent too much time at Mar-a-Lago on the first presidency, and he just trusted too many other individuals. So I think this time around, we're going to see a lot of changes, and the markets really don't like that. But I think in the long run, we'll be okay. But that first year or two, you know, we could see some pretty big fireworks in the stock market. So that's just my gut instinct. What are your thoughts on that, Steve?
Well, this country faces some monumental problems. Probably the worst set of problems that I can remember in my lifetime.
Yep.
So, you know, the challenges are great. I feel I'm very happy though that Trump seems to have surrounded himself with very competent people.
I agree.
You know, he didn't go for the DEI hires when he went to get these people. He went to people that have been proven to people from outside of government that are good at solving problems, and we have major problems. So we've got some engineers, you know, working close in the administration, and that's what engineers do, is they fix problems.
Yep.
And
yep.
So if Trump can't get it done, I'm not sure how it's going to get fixed. I really just don't.
Yeah, no, I think he's going to come in there guns blazing. I think there's significant structural issues right now that need to be fixed. I mean, just look at the deficits. I mean, just look at all the wars and you know, money flowing outside of us and not here. You know, you look at, in my opinion, you look at other countries and they've reinvested in it. You look at the UAE and Saudi Arabia, and they've reinvested so much in their countries. You know, and their countries are, you know, their cities are first class, and we need to, in my opinion, we need to catch up and start reinvesting here on the shore in our own country instead of helping everybody.
Our city's literally burning to the ground right now.
So. They are. You know, you look at San Francisco. I'm from California and LA, and it literally just burned down. And you know, I hate to say this, but you know, I hate to see people lose their homes, but there's portions of LA that need a redo, you know, because it's just so run down. So,
unfortunately, you know, Trump's talking about the important things like the Gulf of America and taking the Panama Canal and Greenland and some of these things, which I really don't think he's serious about. Maybe a little bit, but I don't know. I can't tell you how serious he is, but I do know that it's taken the narrative off of his administration picks to lead some of these offices.
Good observation.
And so, you know, he's just a master at trying to control what the narrative is. And if he can keep the press and everybody distracted on Greenland or something like that, maybe there won't be as many eyes in Washington, what's going on there. And that's really where the important things are happening right now.
I agree with you. I call it 5D chess, you know, and And with the Greenland and the Panama and the things that he's saying now, in my opinion, he's just, like you said, he's just kind of distracting people. And I think they're really working on real solutions for the real problems. And he's just, playing the media a little bit, in my opinion, because when you get to the other side, quite often you go, oh, that's what he meant, or that's what he was doing, So it will be interesting. I'm excited to be honest. I'm excited. I hope this country, we get things back in order, and we get the middle class going, and we get the money exchanging hands, and give us all a little piece of hope and positivity for the future. So,
amen.
all right. Well, that is it for the week. Steve, do you have anything else to say?
No, that covers it for today.
That covers it. All right. So this is our weekly roundup of stuff that we're looking at. If you have any questions, you're more than welcome to reach out to us. We've been doing this a long time. I know Steve, 20 plus years, myself, 20 plus years. So reach out to us. Be more than happy to share our ideas more on a trade by trade basis. But again, this isn't specific trade advice, just overall view of what we're looking at and things we saw this week. Hope you guys all have a great day. Take care. Bye.